Welcome to the Pirls Stock Market Commentary video featuring the proprietary bull bear point and figure market breadth summary chart for November 27th, 2016. Market breadth. With this past week's market advance, our bull bear point and figure ratio at 1.73 rose from 1.32 last week, advancing further into bullish territory. The total count of securities in bullish or bearish patterns increased 2% to 3,165. The count of bearish stocks decreased 13%, while the count of stocks in bullish patterns increased 13%. The Pirls PNF Market Breadth Summary chart shows us a market now 3 weeks in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking membership, clicking register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 243 points for the fourth advance in 17 weeks. At a positive 89.04 points, it continues below all 5 tops above plus 100 and continues above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. Now at a positive 128.66, down from a positive 130.53 a week ago, the CCI 20 daily continues in a Woody's uptrend and outside the plus or minus 50 range for a valid zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 30 weeks ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. The CCI 20 weekly has risen to a positive 178.79 from a positive 86.0 last week, continuing from the Woody's zero-line reject long entry signal within the plus or minus 50 range at Friday 11/11 close. We will continue to follow the results of this trade simulation in next week's commentary. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and only one of the bottom 5 are negative. Summary: brokers, oil services, and some tech on top. Gold and silver, some tech, and REITs on the bottom. Bullish, brokers continues in the top 5. Semis has entered the top 5. Gold and silver continues in the bottom 5. Bearish, oil services continues in the top 5. REITs and comp tech continue in the bottom 5. KBW Bank and disk drives have left the top 5. Focus this week from www.markstcyr.com. Standing alone for what comes next is anyone's guess. By Mark St. Cyr. The following are some key points. Here is where a spectacular bull run-up in markets may turn into a truly terrifying off-a-cliff stampede should just one metric change. That metric, the yuan. As I sit here today typing, the Chinese currency is not only still in free fall, it is resting precariously so close to the cliff's edge. If it falls over, it will take all markets with it. Emphasis on all. For if one thinks August of 2015 was scary, let me use this for analogy. August 2015 will look like a kiddie roller coaster as compared to what the market's newest amusement park has constructed in the last few weeks, if it all goes awry. And China, not the Fed, is the one contemplating on whether or not it will open sooner rather than later, and the clock is ticking. If you think China is going to sit idly by so the Fed can just raise rates to then watch their currency tumble into oblivion, forced by circumstances not of their own volition, causing capital outflows of historic proportions, which may or may not exacerbate civil unrest within its borders, when it has, as in knows precisely the mechanism as to manipulate a possible delay to their own benefit, I believe is foolhardy at best, willingly blind at worst. For all intents and purposes, dry ships was at one time regarded and held as the be-all, tell-all bellwether, especially for one CNBC buy king for global trade. And when the markets displayed a Trump winning means we're building again, everything jumped in unison to march what the so-called smart crowd was touting as more causation rather than correlation. That is, the markets are a forward-looking indicator, so get on the bandwagon quick before it passes you by. As I've said many times before, beware when everyone's on the bandwagon, except the band. And it would seem that's precisely what a lot of people noticed, or at least recognized one mother of a short squeeze for what it was, and thought better of it. Sadly, for those who bought into that whole causation premise that was being touted across the financial business media at large and did the whole buy thing, you have my sympathies once again. So here we are, and one needs to ponder which way or view is the correct one. Here's what I know. Nobody knows. And I mean just that. Nobody. Thank you for watching this week's Santu Pirls Stock Market Commentary, featuring the proprietary bull, bear, point, and figure market breadth summary chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you have enjoyed a peaceful and pleasant holiday weekend, that you are looking forward to a prosperous and productive week coming up, that you don't get too scared by The Walking Dead tonight, and as always, wishing you true success.